Mike, among the reasons for some of the pressure on retail names, there's the retail sales number, which was a miss. There's obviously these names which run up between prints. And then there's the Amazon news. Which do you think is the biggest culprit today?
Well, I think when it came to Walmart and Home Depot, it's mostly just the fact that they've been such COVID beneficiaries, and the numbers, as great as they were, just do not seem replicable, especially for Home Depot going into next year. So those were kind of softening up in terms of the stock reactions, even before we got the government retail sales number, which I do think has had a dampening effect. It was a little bit of a sign out there of, OK, we see the consumer not quite being as strong last month. We've been waiting for this moment, perhaps, where the stimulus had run out and they've kind of cut through some savings. I don't think it's a real alarming number, but it definitely shifted the focus back toward downside risks in terms of consumers' capacity to spend. Walmart's quarter is pretty unassailable. I mean, you would go right down the list and say, in terms of free cash flow, in terms of the comps, in terms of the online exposure, everything was great. But the stock came into it at an all-time high and a pretty full valuation, I would say. So I think those are the order. I don't think the Amazon news is really bearing on the broad-scale retailers, but yes, I mean, just very profound impact on the pure play drugstores for obvious reasons, because also they've run up tremendously this month.
Yeah, it's interesting. We spent the past decade, really more than that, Mike, talking about Amazon killer categories where they come in and take the sand out of the sandbox. But past couple of years, I've seen a lot of progress among other players when it comes to e-commerce, getting their digital ducks in a row. I just wonder if you think that phenomenon is as powerful as it was, say, 3 or 4 years ago.
Yeah, I think people have become conditioned to look at this as an opportunity for an overreaction in the stocks. In other words, it's not necessarily on day one Amazon comes in and owns a category. One bit of sensitivity, though, I do think in terms of pharmaceutical distribution is there's a general sense out there that the middlemen, there's a lot of kind of non-transparent friction in that business. And if Amazon does take aim at it, there's probably a way that it kind of makes the whole industry more efficient and maybe less profitable. But this one-day reaction in CVS, Rite Aid, and Walgreens seems mostly about a little bit of hot money in these stocks because they were definitely on the vaccine trade. And that's being unwound. And then you wait and see, because they all are also in all the value indexes, which everybody was buying hand over fist for the last couple of weeks as well.
It's David, which takes me actually to exactly what I want to ask you, which we've talked about for years now, which is the growth versus value trade. You just mentioned value, which suddenly has come into favor very briefly. But I wonder, we've watched it so long, inevitably, it seems investors return to growth. Are there any tells, are there any signs that you look for to see whether, in fact, this move to value that's happened since we got these vaccine announcements can be sustained?
I think, David, if you look at the last couple of months, not just since the Pfizer announcement, you have seen some traction building in the cyclical areas. I would draw a distinction between more cyclical type stocks and, yes, many of them also value, but not just purely cheap, but ones that are exposed to a stronger economy. Yes, you have seen a little more progress on a relative basis in that direction. But the biggest case for value, honestly, and has been for a while, is that it's been down and out so long and is so far stretched below growth on a very long-term basis that just your standard mean reversion move all of a sudden becomes a much better prospect for value. So it's a little bit of a leap of faith you have to take to say that the old rules apply. These things can't stay out of whack for that long or go that far. So, I mean, you've seen only halting signs that this is an enduring trend, because it's very difficult when the market's at a high to say there's going to be this seamless handing of the baton to a totally different style of stock. Usually that happens in some kind of a nasty pullback or bear market.
Mike, you covered throughout the month of October the money that was on the sidelines as people waited for the election. There was a certain pause because they didn't know exactly which way the market was going to go. But I wonder, now that we've seen a few monster rallies on the back of this vaccine news, if the flows are telling us that most of that money has come back into the market now.
Yeah, Kayla, I wouldn't say most, but you've had a very aggressive move back into equities. By the way, this happens around elections. You can go back and look multiple cycles. There is a bit of a lull in terms of inflows. People wait and see. And then almost always they kind of come in and buy the market higher than they could have around the election. But be that as it may, you've definitely seen fund flows surge. You've seen bullish sentiment go up. You see the Merrill Lynch fund manager survey today saying folks are all in, especially on the cyclical trade. So I think, this can go on for a while, and it doesn't mean that because we've had 3 weeks of people getting excited about the market that it's over. But you're now in a mode of having to watch for people getting a little too overexcited and overconfident, and maybe the market gets a little stretched and has to bend a little bit and soften up in the short term, just to kind of, take measure of all that aggressive flow.
Shepard Smith here. Thanks for watching CNBC on YouTube.